While everyone was focused on Vanguard's Bitcoin backflip and Bitcoin's 6% pump this morning, they might have just accidentally admitted that Wall Street has been manipulating the Bitcoin price crash. And of course, we all know what JP Morgan has been engaging in some very suspicious actions the past week, but I think we all miss what Vanguard said in their press release when they announced that they are allowing their customers to go into the Bitcoin ETF. So, interesting saga. Of course, we are not alone here. I do have our boy Kent Halliburton from SazMining, CEO and co-founder, and of course, I do have Nico with me here as well. Let me just jump straight into the source material. So, actually, maybe I'll start with this. Remember, I said this a while ago, and everyone thought I was kind of crazy when I said it. But I was telling you guys, remember when Vanguard came out, or rather when the ETF was launched, the old CEO of Vanguard, Tim Buckley, he was very adamant, we are never going to allow our customers to buy Bitcoin ETFs. Very adamant about this. It was kind of all the noise. Everyone's like, okay, you know, have fun staying poor, whatever. If you really want to hurt your clients like this, it's on you. Then the saga kind of went a little further. I think a month later, he resigned. He was let go as CEO. They put in a new CEO, and just coincidentally, that new CEO of Vanguard is the exact guy that launched the BlackRock Bitcoin IBIT ETF. And we've all been kind of waiting and watching and being like, it's only a matter of time. Obviously, you connecting these dots, only a matter of time until Vanguard allows their clients to come into the Bitcoin ETF. Yes, Nico?
That's the breaking news. The breaking news is that Vanguard announced
yes,
that they are basically accepting, they're launching or allowing their clients to buy the Bitcoin ETF. And I want to play the clip.
Yeah, let's play the clip.
CEO.
Yeah, I got it in here.
Like, you guys have to check this out. Like, he goes from basically saying, you know, Bitcoin is a demon to getting basically fired because BlackRock literally has a monopoly on it. Now BlackRock's Bitcoin ETF is their most profitable product by a large margin. The guy obviously didn't make a good decision. And then a year later or so, Vanguard, which is the second largest asset manager in the world, basically says, oh, you know what? Actually, you can buy Bitcoin ETFs through Vanguard if you would like. And this is what market forces do best. We told you guys this was going to happen back in the day. But anyways, take a look at this clip of the old Vanguard CEO, and he has pie on his face at this point.
In itself, you will never see a fund from Vanguard on Bitcoin. We tend to stay away from assets that don't have underlying economic value. They don't generate earnings or cash flows. So if you look at we don't have a gold fund either. And so the Bitcoin, its value is based off of scarcity and an artificial scarcity that's out there. It's really tough to imagine where the long-term return comes from other than speculation.
Yeah, hot take from the old CEO.
Wrecked, bro. Wrecked. Like, absolutely wrecked. They walked it back dramatically. That is literally the definition of, you know, pie on your face. Opti, I'm gonna pass it on. I'm gonna pass it back on to you. Walk us through what some of the source material.
Yeah. So here, let me pull this up, guys. I'm using the Barron's clip. You could get the same thing on Bloomberg, but obviously I don't have a Bloomberg account, so we're gonna use this as our source material here. The headline is Vanguard finally allows crypto ETFs and mutual funds. You can invest right now. So they literally announced it yesterday. They're like, effective immediately, we are going to allow our clients to invest in the Bitcoin ETFs, particularly, Bitcoin and a couple of shitcoins. But here we go. Vanguard is allowing customers to invest in cryptocurrency ETFs and mutual funds, reversing its policy of banning such investments from its massive brokerage platform. The change is effective today. The company is essentially providing investors access to funds by other companies that track digital assets such as Bitcoin and then a couple of other shitcoins. But this is funny in this article. They say assets such as Bitcoin, Ethereum, XRP, and Solana, but not meme coins. And I read that and I'm like, yeah, you literally named 3 meme coins, but you know, whatever. Maybe I'm, you know, being a little bit pedantic here. Anyways, the company changed course now that there's more data available how crypto funds perform. Vanguard said on its website, quote, just as we do with all investment vehicles and asset classes, Vanguard consistently monitors the cryptocurrency space. Going further, and I think this is where it gets really interesting, and this might be the smoking gun. Obviously, they're kind of framing this as, hey, we did this on purpose. We dragged our feet because we wanted more market data. We needed to see how these ETFs performed. We needed to see if it was viable for our clients. I think it's just saving face. When you read that on one level, it's like they're just saving face. They realize that not only does the market want it, but BlackRock has very clearly came out and said, this is the best performing ETF product we've ever had. Super happy about it, which does make you kind of question and wonder, what is going on with Jamie Dimon and Larry Fink. I don't think the kind of perspective and narrative that they want to crash Bitcoin is necessarily on point, because they're making a killing. Remember, Jamie Dimon, or rather JP Morgan, is the authorized participant of BlackRock's IBIT ETF. So they're incentivized for these products to go good. Whether they go up or go down, they're going to get their fee. They're going to make their money. And this is when I think you start to see kind of the game being played right now. Not only has JP Morgan been attacking strategy, they've been in the space through the IBIT Bitcoin ETF. They're making a killing on it. And then they just launched their own kind of note structured a la Michael Saylor copycat product. I don't think we can say that Wall Street is necessarily against Bitcoin, though I think this is where you start to see the more nefarious stuff going on, where it really does feel like Wall Street is trying to co-opt Bitcoin. And if you're giving up your Bitcoin for these Wall Street products, then you are playing exactly into their hand. Anyways, I want to read this next quote, and then we're going to kind of chat about what the effect was of Vanguard on the market. So, quote, this ongoing analysis has informed our decision to allow most third-party cryptocurrency ETFs and mutual funds on our brokerage platform. Quote, these products have been tested through periods of market volatility, performing as designed while maintaining liquidity, and the administrative process to service these types of funds has matured, and investor preferences continue to evolve. So again, on the one hand, you read this and you're like, okay, you know, they just needed a little more time. They're trying to test these products. They're trying to make sure it's safe for their clients. On the other hand, it is interesting when you hear them talk about, you know, testing market volatility, and it makes you wonder, like, are these crashes being designed right now? Are they kind of coming into the market? And actually, I'm going to pass it over to Kent here, because Kent was telling us kind of the view of what he thinks is going on with Wall Street. I think this is a perfect place to kind of jump in here, Kent. So Kent, thanks for coming in. And can you rehash what you just told us before we went live? Because I think this is like the perfect framework for what's happening.
Yeah, I'd love to repeat myself. Thank you, Opti. No, just messing with you, buddy. No, I sort of expected that you'd ask me to rehash what I shared before we jumped on the show. And if you guys are noticing the different backdrop, I am in Mexico a little bit early for the Mayan Bitcoin conference this weekend. So if anybody's coming to that, please say hello. And the room's slightly echoey, so apologies. What I was sharing with Opti before the call, though, was I think, you know, our industry has largely not been accurate, right, on a forward-looking basis as to what's going on. I think that it's only with the ability to look through the rearview mirror that you can piece the facts together and make a narrative that makes sense. And from where I sit right now, the narrative that makes sense of what we're experiencing is that we all know that the market structure changed when the Bitcoin ETFs launched, right? It was just clear that we were at the big boys table now. And with that came big boy table games. And I think that that's what we've been seeing play out. And specifically, the big boy table, they like to play the game of, hey, how do we prey on what the market thinks is true? And what the market has thought is true is the 4-year price cycle. So to me, if you look at where we topped last at the 125, 126K mark, that was almost to the day where the 4-year price cycle should have peaked. And the fact that we peaked then and then we've since dumped, it makes sense if you are trying to ultimately get your hands on the biggest bag of the scarcest asset you possibly could acquire. You would want to take advantage of the market's psychology of believing that the 4-year price cycle was going to continue to play out. So you'd run it up to the day, you'd start the dump and you'd start the sell-off. And then just yesterday is when I saw the MNAV for Michael Saylor, or for Strategy, go under the 1 mark. And that just means that all the Bitcoin on the balance sheet for Strategy is valued at less than the value of the total Bitcoin on the marketplace. So to me, that was perhaps a bottom signal. I'm not calling a bottom here because I'm not that brave or that convinced. However, these are the sort of indicators that you get at a bottom, right? It's like the 4-year price cycle. Okay, they've preyed on that. They've now dumped the price. Everybody thinks we're going to continue to keep going down. And that's the exact moment where the big boy table, they start to fill their pockets with chips. So we'll see in a few more months. I think Nico said something about we need to wait till February. I'm kind of in the same camp at this point. The 4-year price cycle is clearly not working the same way longer. Whether we are this is a bag fill moment for institutions, or whether it's going to turn into the beginning phases of a longer bear market, it still remains to be seen. But the narrative in my mind that I'm leaning into, not necessarily from a business standpoint, but personal beliefs. I mean, I'm a CEO of a business, so I've got to be a good Boy Scout and be prepared. And that means for planning conservatively and taking advantage of upside. But personally speaking, the narrative that makes sense to me is that the institutions have just played us, and they've done a damn good job of it too. And they're filling their bags right now, and the bull market will continue.
Yeah, that's literally why me and Nico have been arguing on the show. Exactly what Kent said is kind of what I've been trying to explain to everyone. It's like I just think things have fundamentally changed, and like you said, look, you might not be brave enough, but I'll say it because I know I'll be wrong all the time. I really do think that this was the bottom. I like everything I'm seeing is kind of leaning me towards just being extremely bullish on what's going on with these institutions coming in. Now, I'm not really bullish on the institutions coming in, but that just goes to show you, like, the unlimited bid coming in right now. It just makes no sense to me that we would go down, to a 30, 40, 50K big, maybe 50K. I don't know. If we really are in a bear market, that might be a possibility. But with every kind of huge institution in the world coming in right now, to me, it's like they're planning this to a T, and they want to get a good position, and then they launch products literally at the very bottom, like on these days that are crashing. To me, it's just pointing towards they are in complete control of the price. And here's Eric Balkunas, of course, Bloomberg ETF senior analyst, and he's got some kind of funny tweets here. And he goes, all right, the Vanguard effect. So Bitcoin jumped 6% right around US Open on first day after Bitcoin ETF ban lifted. Coincidence? I think not. Also, $1 billion in IBIT volume in first 30 minutes of trading. I knew those Vanguardians had a little degen in them. Even some of the most conservative investors like to add a little hot sauce in their portfolio. And then he follows it up and goes, Vanguard saving Bitcoin was not on my 2025 bingo card. I can tell you that. And then, of course, he's plugging the Bloomberg charts here. But it is very interesting. I think the timing of everything is the part to me that makes the most sense. Exactly what Kent was saying, where I've been calling it the billionaire FUD playbook. When you want to come into Bitcoin, what do? You don't really telegraph your moves up front. You kind of maybe dig your toes in. You kind of, maybe get your feelers out. You FUD it a little bit so you can get a good price. Once your bags are packed, then you're like, I'm ready to go. Though now we're seeing it on the institutional level. What are they doing? They kind of FUD Bitcoin for a while. And then once their products are ready, they launch it and it's pretty much at like the best buying opportunity possible. So to me, there is a lot of shenanigans going on right now, and that's why I'm just like, this thing is not going down. Anyways, before I pull up a little more Wall Street news, Nico, let's cover the saga of the Vanguard. What do you think is the significance of the time? Are you still bearish? Maybe is the better question.
Yeah, I mean, look,
yeah, he is.
yeah, I still think that the 4-year cycle is it's intact until it's not, and I think not preparing for that, I think, is incredibly naive. I think we might have a great December, but until we pass that 115, 117K mark, I'm gonna be, I'm still in bear mode, right? But I think if you were to zoom out and pay attention to the macro signals, this is incredibly bullish. Like, this is so effing bullish. Like, I can't emphasize how bullish this is. You went from the second most powerful asset manager in the world, from their CEO going on legacy mainstream media and saying, hey, look, Bitcoin actually isn't a real asset. It actually doesn't even produce anything. To the guy getting fired, then the guy getting replaced by someone who is like pro Bitcoin, and then them basically admitting, hey guys, we're actually launching this product so that if you want to get access to Bitcoin using, the Vanguard platform, you're totally able to do that. Like, that is pie in your face. That is the free market doing what the free market does best. And I'm here for it. I love to see it. And yeah, man, like this is the definition of winning. There's also another bit of news that I wanted to cover as well, which is simultaneously the same day that this was happening, we had Bank of America. Check this out. Like, this is wild, right? So this is a CoinDesk article. Bank of America green lights wealth advisors to recommend up to 4% Bitcoin allocation. Now, the reason that number is so significant is because I remember when we started covering this kind of institutional adoption of Bitcoin, the number was like 1%. It was 1%. And then, like everyone else in their hodling and Bitcoin journey, that number went up to 2%. And then that number went up to 3%. And then that number went up to 4%. And then all the holdouts, what I would call the ideological holdouts that were not into Bitcoin for ideological reasons. It's an asset. It doesn't produce cash flow. It's artificially scarce. It's not actually scarce. The 2017 FUD excuses on Bitcoin, right? All of those fell by the wayside. Look, even though, MicroStrategy is getting hammered right now, even though the Bitcoin price hasn't really performed up to par this year, don't pay attention to what they say, pay attention to what they do. And the signal on today's intro is very simple. The second largest asset manager in the world that was negative towards Bitcoin did a complete 180. And like every other very powerful, wealthy individual or institution in the past, including the likes of Donald Trump and Michael Saylor and BlackRock, every single institution or person has eventually bowed down to the king. And that's exactly what Vanguard has done. They've taken a knee. They're bowing down to the king, and they're saying Bitcoin is here to stay. Not only that, one of the largest retail banks in the United States that actually owns Merrill is telling their clients, hey, we actually think it's a pretty good idea that you can have up to a 4% Bitcoin allocation. This is wild. This is crazy. This is something that we thought was inevitably going to happen, but still, it doesn't take away from the shock and awe of when it does happen, right? So let's take a look at some of this article, what the source material is saying, and then we'll talk about it. So first off, Bank of America greenlights wealth advisors to recommend up to 4% Bitcoin allocation. The news comes just hours after longtime crypto holdout asset manager giant Vanguard would said it would allow its clientele access to digital asset ETFs. Now, I want you guys to pay attention to the timeline. We had massive FUD, coordinated FUD on Strategy, coordinated FUD on Tether. We saw the price fall from 92,000 to 85,000. The week before that, it fell from the highs all the way down to 80. And then coincidence, at the same time, Bank of America and Vanguard say, hey, bro, actually, you could buy your Bitcoin through us, right? So it kind of goes back to Opti and Kent's thesis of there are some shenanigans that are being played in the back that are trying to take the price of Bitcoin down so that all these institutions could stack cheap Bitcoin. Bank of America, one of the world's largest financial institutions, has become the latest Wall Street giant to warm up to Bitcoin. Beginning in January, the bank's wealth management advisors will be allowed to recommend a 1 to 4% allocation to crypto assets. Now, I'll tell you this, guys. What's the signal in that paragraph? Beginning in January. Beginning in January. So if you're Bank of America, what are you incentivized to do? Do you want the price to run away from you before January happens? Do you really want? Do you think Vanguard wanted the price to run away from them before they made this major announcement? Do you really think they wanted that to happen? I don't think so, right? Initially, the Bank of America Merrill Lynch Thundering Herd will focus on 4 spot Bitcoin ETFs: the BlackRock, the Fidelity, the Bitwise, and the Grayscale. It's a major change for the bank, which previously allowed its clientele to invest as they wish, but they did not allow its advisors to recommend crypto exposure. The news comes just hours after asset management tied in Vanguard reversed its long-standing policy and will now allow its clients access to crypto ETFs. The move also brings Bank of America in line with the wealth management platforms of other major institutions like BlackRock and Morgan Stanley. The action also likely ups the pressure on the dwindling number of holdouts, Wells Fargo, Goldman Sachs, and UBS among them. Quote, for investors with a strong interest in thematic innovation and comfort with elevated volatility, a modest allocation of 1 to 4% in digital assets could be appropriate. The lower end of this range may be more appropriate for those with a conservative risk profile, while the higher end may suit investors with greater tolerance for overall portfolio risk. So I'm going to tie it up with a nice bow on top. The holdouts, Wells Fargo, Goldman Sachs, and UBS. I'm calling it right now, as I called the Vanguard thing. When the Vanguard thing happened, I went on Twitter and I said, this guy's going to get fired. And I don't want anyone to lose their job. Like, that's horrible. But you can't stop. Like, Bitcoin is a monetary black hole. And once you cross the event horizon, you ain't going back. You ain't going back. And as soon as the world's largest asset manager, BlackRock, launched the Bitcoin ETF, and it became the most successful ETF launch in history, and it is now the most profitable ETF that BlackRock has to offer. All the other financial players had absolutely no choice but to follow suit. They didn't have a choice. This is capitalism after all. If you decide to take a stance for ideological reasons, look at what happened to Vanguard. the guy lost his job. You know how much money Vanguard probably lost in the last 2 years for taking that stance? At the end of the day, look, these banks, it's like when PayPal wasn't offering Bitcoin. It's like when Robinhood wasn't offering Bitcoin. I told you guys, I said, listen, guys, not only are they going to offer Bitcoin, they're eventually going to offer you the ability to withdraw that Bitcoin from the exchange and send it to self-custody. Why did I know that? How was I so confident that was going to happen? Because Cash App was killing the game by offering Bitcoin and by offering Bitcoin withdrawals. So any Cash App competitor like Robinhood, like PayPal, they have no choice but to match what their competitors are doing, or else they're going to lose business. And this is exactly what's happening here. This is why Jamie Dimon fudded MicroStrategy and is trying to funnel some of that business to his bank. This is why Bank of America is saying, hey, guys, actually, we are going to let you do this. This is why Vanguard bent the knee. It's Bitcoin's incentives. Bitcoin is a monetary black hole, and you cannot resist its gravity. You're literally like swimming up against the stream. It's not going to work out for you. So it's just a matter of time before Wells Fargo, Goldman Sachs, and UBS follows in the footsteps of BlackRock, Donald Trump, Vanguard, Michael Saylor. Everyone bends the knee to the king. Every single person. And the sooner you do it, the faster you benefit from it, the bigger the monetary benefit it's going to be for you and your customers and your company's treasury. The more you resist, the more you're going to wreck yourself. Take whatever ideological stance you want. Bitcoin is here to stay. It's the best asset the world has ever seen. It is pristine collateral. If you don't want to jump on the train's going to leave you, and you're going to have fun staying poor. And that not only applies to retail, but that applies to institutions. If institutions don't buy Bitcoin or start offering at least Bitcoin to their clients are going to have fun staying poor. Their clients are going to get pissed off because they let them have fun staying poor. Their clients are going to jump ship and go to someone else that is offering Bitcoin exposure. This is incentive. This is the game theory. This is why I keep telling you that Bitcoin is going to win. And I know that with 100% certainty because Bitcoin has incentives. And the other option, it requires coercion, right? And as history has shown, my money is always on incentive. So that's my little tidbit on that. Another huge victory. This year has been a year of historic wins for Bitcoin, but it's been a catastrophic year for price action. So when will the price action catch up to all these amazing, fantastic wins that we've been having on the regulatory level, on the institutional adoption level? When is the price action going to come back? Someone's making fun of me saying I'm bull-tarded back. I don't think so. My bull-tardedness has not come back yet. I want to see all-time highs. I was promised a parabola. I want the euphoria phase. It's been 4 years since euphoria. I haven't seen it. I haven't felt it. I haven't experienced it. I'm kind of scratching myself saying, when's it coming back? It hasn't come back yet. I'm waiting. So Opti, that's my bit. I think we're winning. It feels like we're winning. Another one bites the dust. No, another two bite the dust.
Yeah.
We should have like a soundboard effect every time that happens.
Yeah, listen.
We have this. I think I think two things are playing out right now, right? One, as we've kind of been following along all year, it does seem like this is the year that every institution is kind of bending the knee to Bitcoin. And at the very same time, you would expect like two things to happen. One, that like Main Street would have a much more positive view of Bitcoin, and you think that they would come in force. You think, like, since every institution came out, all the authority figures came out pro Bitcoin, you'd figured that retail would finally come back into Bitcoin. Maybe they're all, this is just the boomers saving the Bitcoin bull market because they're all buying the ETFs right now. But you would also expect the Bitcoin price to go up if you weren't really kind of thinking of the mechanics and the game theory playing out, which is exactly what Kent laid out earlier. Where and I've been saying this on the show for the last couple of weeks, it's just like my intuition. You ask me what my source is, I'm like, I don't know, guys. It's just intuition. This is just a vibe that I'm getting right here, that this is the first year that the institutions, like all of them, remember all the different news of the banks finally being able to get into Bitcoin. Obviously, the ETF launch, everyone's kind of positioning themselves. It's like, if this is the first year you can get into the space, then you're obviously going to kind of want to get a good price here. And 100K is their starting point. And right now they have a 30% discount. And I think they're just going to absolutely send it, especially when you're seeing the Bank of America kind of unleash. I think they have like 15,000 wealth advisors now. So they're unleashing their army. Remember what we were saying about BlackRock unleashing their suits out there to educate people about the ETFs. Well, now we got Bank of America as well. Obviously, from our perspective, we think the best thing you should be doing is buying Bitcoin spot directly, taking it into cold storage. But this is very good PR on the general narrative around Bitcoin. And so, as Nico kind of pointed out, they're launching in January. So I wouldn't be surprised if this end of the year is still slow. And then we do have a very bullish 2026, because now they're all positioned. Now they're all ready. Obviously, they want to make some money off of this as well. I mean, they make money either way because they get fees whether it goes up or down. But I think I'm kind of leaning towards 2026 is going to be a bullish year, Nico. I'm going to say it now.
Let's see what happens. Anyways, if you guys are enjoying the show so far, make sure to smash that like button. It's going to be a fantastic show. But before we jump into it, I do want to give a very special shout out to our lead sponsor, best place to build your automatic self-custody Bitcoin stack, bitcoinwell.com. The reason we recommend bitcoinwell.com here at Simply Bitcoin, it's an automatic self-custody Bitcoin on-ramp. Say, Nico, what in the hell does that mean? That means that when you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address. They don't even give you the ability to leave the Bitcoin on the exchange, which of course perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Because after all, self-custody is the revolution. If you're a higher net worth individual and you want a tailored white glove service, if you're looking to buy $50,000 worth of Bitcoin or more, you have to check out Bitcoin Well Infinite. To get started, go to bitcoinwell.com/OTC. This is a service designed for family offices, high net worth individuals, trusts, and organizations. Speak to their team today. Go to bitcoinwell.com/OTC. And again, you can also go to bitcoinwell.com/simply. You go to bitcoinwell.com/simply, you get to earn Bitcoin Well points for free. And you could use those points towards the Bitcoin Wishing Well contest, which we're going to be doing live for you guys towards the end of the show, where Bitcoin Well, through Simply Bitcoin, will be giving away free Bitcoin. So get your Lightning wallets ready. It's going to be a fantastic show. We're going to be right back in just a little bit. I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stampseed
and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All right, everybody, we are back. At the time of recording, the Bitcoin price is $91,900. The block height is 926,169. Market cap 1.83 trillion. Bitcoin versus gold market cap 6.19%. Bitcoin still has a ways to go to catch up to gold. Like a ways to go. I think it's like a 20x, bro. Oh my God, that would be delicious. That would be fantastic. Decline from all-time high. If you're buying Bitcoin right now, you're getting it at a 27.1% discount, which obviously we recommend. Anyways, we have a clip of Tom Lee on the Legacy Financial Media talking about this cycle, the latest drama. What's going up? Are we going up? Are we going down? What is going on with MicroStrategy? Let's check out the clip, and then we shall talk about it.
I think the biggest tailwind that's going to emerge in the next couple of weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. You know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy, so I think people got cautious, but now have to performance chase, and then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
So, and let's talk about that. So I thought it was December 1st that QT ended, but officially, apparently it came December 2nd. But the Federal Reserve has officially ended QT, so quantitative tightening. And then what he said, he buried the lead there. But the most important part is that he predicts that quantitative easing is coming, aka money printing, right? They have to call it something sophisticated so that the average Joe, the everyday person, is not in the know. And then Opti also sent me this from Bar Chart. Fed Reserve just pumped $13.5 billion into the U.S. banking system through overnight repos. This is the second largest liquidity injection since the pandemic and surpasses even the peak of the dot-com bubble. Probably fine. Carry on. Right? So I love this. Here we effing go again. So here's my take. The money printers are back, boys. The money printers are back. I love what Opti was telling me in the beginning of I love what Opti was telling me in the beginning of the show, where he was like, you know what? Like, let them print money. You know, screw the middle class. At least the assets are going to go up.
I didn't say all that. Okay, I didn't say all that.
And I was like, Opti, calm down, bro. You can't say that. That's inappropriate.
Hey, you don't say that.
What do you mean?
That's what you said to me. Yeah, you don't say that.
So, you know, yeah, I mean, look, Larry Lepard said it, the big print, Lynn Alden, nothing stops this train. They have to print money. They have to print money to fulfill Trump's agenda. It is what it is. And quantitative tightening just officially ended. And next year, Donald Trump is going to be able to appoint a new Fed chair, which again is going to be more friendly towards his overall agenda and policy, right? So, you know, again, it kind of goes along with what Opti and Kent have been saying throughout the show in regards to, look, we might have a bull market in 2026 that actually might be happening. So I don't know. I want to get Kent's thoughts. Kent, what are your thoughts on what Tom Lee was saying? You know, the end of quantitative tightening. This has been going on for this entire cycle, ladies and gentlemen. This Bitcoin bull cycle has been happening during a quantitative tightening type of situation, right? I believe that hasn't really happened before in Bitcoin's history. So that could also be an explanation as to why we aren't getting that regular parabolic price action. Kent, what are your thoughts?
Well, I think I've changed my mind. I'm going to call it bottoms in.
Let's go.
Yeah. And I say that because, hey, listen, boys, listen. Let's just be real for a sec, right? I'm running a mining business. I am not a news squatter. So I don't get to just sit and read all the headlines as quickly as you guys can absorb them and make sense of it. And so just seeing that two major institutions flipped on the same day, to me, that's a signal. That's how institutions play the game, right? They all go in lockstep to get the market to move one direction, and then they get it to move the other. And the fact that they're both going in lockstep, basically within 24 hours of each other, and they've saved a few more businesses. You know, the Goldman Sachs and UBS, and there was another one there that you mentioned. Those guys are going to pile on later, like when momentum starts to stall, and when you see them come out to the market, you'll know that that'll be the next sign of juicing it. And I was thinking about your well-oriented rant there, and I was glad I wasn't on those train tracks, Nico, because they would have run me over. But the thing that was catching my attention as you were saying that was that the gosh, how do I say it? Well, forget it. I'm going to move on with my thought process here. But what I'm seeing here in the market is bottoms in. We're going up from here. And what I see this too with our customer base, right? Like when the price falls, our customers don't have as much interest in getting into mining, and when price rises, they start to. And that's also a sign of a bottom for me, is people are coming back to the table and want to invest in mining again. So we're heading the right direction here. And when you see as good news come out and the market doesn't react, which was most of 2025, that's actually how a bear market behaves. So it's really weird to say this, but we went to 109 in January of this year, and then it was almost like we had bear market conditions all year. And that sounds super weird, but we really didn't get any of the euphoria. It sucked. We've all been like in this endurance race for the last 4 years, waiting for the euphoria moment to feel like, hey, we're alive again, and we're off to the moon, and our lives are going to change and all this stuff. And it just hasn't happened. So I get why you're teed off about that, Nico. But I do think that 2026 is going to be kind of a magical year here for us, because in essence, if my read of the market's right, and I'm not saying I am, a lot better men than me have been wrong, but it looks to me like this entire last year has basically been a bear market, because good news coming out hasn't even changed the price. And that only happens in bear market conditions. So lack of euphoria, good news not changing price, institutions here now playing the game. I think we get a euphoria moment in this next year, and then that'll be the time where the market conditions shift.
Yeah, hopefully, man. I hope that you're right, Kent. That would be fantastic. But right now we're kind of in limbo. We're in no man's land right now. Let's see what happens. Opti, I want to get your take. What do you think about what Tom Lee was saying, Opti?
Well, first of all, I do find it funny that Tom Lee just kind of keeps readjusting his all-time high calls all year. It's like it's going to 200K, summertime, and then Q4, and now he's like, maybe it's next year. I'm just trolling, but I think the thesis is correct, and he's not the only one saying it. It's becoming very obvious. Like, the liquidity is coming back on the table. We all know that the Trump administration basically wants to lower interest rates, inject a bunch of liquidity into the system. Again, we're seeing what's going on in the macro landscape. Japan is just injected, the equivalent of $1 trillion into their economy right now. It was what, 131 billion or something like that. So it's all pointing towards the one thing. They are going to probably, most likely, and because they're forced to, they're going to unleash a tsunami of liquidity into the markets right now. And we all know what Trump's been saying. He's like, I'm trying to keep the stock market at all-time high. I'm very focused on the crypto markets. Essentially, he's using that as a second barometer of how good he is as a president. And, the other little factor here in the U.S. is
the midterms are coming up, and if Trump doesn't figure out the economy and people still feel broke, they're going to get cooked. And so the only way they can really kind of affect that is by injecting mass liquidity into the economy and into all of these assets. And so, you know, Nico was kind of trolling me saying that I'm like, turn on the money printer. Let's get the middle class completely destitute. That's not what I'm saying. What I'm saying is essentially, if you see the signals that are being played right now, this is what they're going to do. I'm not here endorsing it. I'm just telling you from everything I can tell, this is exactly what they're going to do. They are going to flood the market with a bunch of liquidity. And if you aren't holding on to assets, you are going to get absolutely wrecked. They've been telegraphing this. This is the only move they have left. They have to do this. They're going to devalue the dollar. And if you are watching this, you have the information to correctly position yourself. And if you're not taking that advice because, you know, I have a 42 IQ and I'm a YouTuber, like I don't know what to tell you. I think 2026, we're going to see a mega liquidity cycle play out. They have to print money, and that's, of course, going to push assets up. So, you know, TLDR, the short of it is I do agree with Tom Lee's kind of thesis here. This is essentially what you're seeing. These are what all the signals are saying. The liquidity is coming back on. A lot of people have been pointing to the business cycle saying like, oh, the business cycle basically bottomed out in Q4. This is why we're kind of seeing the price dump. And now if the business cycle is the main driver of Bitcoin, we haven't really seen much liquidity since, I believe, like Tom said, 2021. So this is why the Bitcoin price has just barely been bubbling. We've been going sideways all year. If that comes back on in force, I don't see how 2026 isn't going to be a bullish year, especially when you understand, or rather when you watch what's going on in all other markets. Again, Bitcoin has just grown up. We are finally at the big boys table, as we said earlier. We are finally being considered like a quote unquote macro asset. Well, look at every other macro asset essentially this year. Of course, you know, stock market's been ripping. I think everyone notices this. There's been a lot of equities that go really high this year. I'm not the biggest fan of them, but they're ripping. They have to keep it on basically overdrive here. Like they have to continue the juice into the system. This is why the stock market's going up. Then we have the gold market rally. You know, gold went absolutely parabolic this year. That is a bullish indicator for Bitcoin. We're all watching what's going on with silver. Silver just broke out of like a 30-year all-time high. It was at $58. I think it's currently around $57. That is also a good indicator of what's going on in the markets and where Bitcoin's going to follow. And usually when those things rip, Bitcoin rips even harder. It just takes a little lag and delay, but everyone's been seeing the same thing. The M2 global liquidity is going up. At a certain point, it will find its way into Bitcoin. And now it seems like with all the institutions kind of green lighting Bitcoin, it's really hard for me to see what obstacles and speed bumps Bitcoin can find right now when it's like they're turning on the money printers. You know, again, like we were saying, I don't think it's a coincidence that QT ends and then all the biggest banks in the world literally on the same day come out and are like, we're pro Bitcoin now. And you're just like, okay, like, you know I'm not the smartest guy here, but like, it's a little too coincidental for me to be like, they're going to pump this into oblivion. And we've heard Trump say it a few times. He's like, I want to pump this Bitcoin thing into the moon, especially when you understand what's going on in stable coins. They have to pump Bitcoin, find ways to get liquidity into Bitcoin so that they can continue to, you know, maintain their power, maintain their kind of front, save face here. So all of that is just telling me like 2026 is probably going to be a bullish year. I know I was very bullish all this year, but obviously I couldn't foresee all of the different black swans we've had. And I think the big black swan for 2026 is one, of course, the liquidity, it's turning back on. And then all of the institutions are positioned for, you know, to basically get all those gains. I think that's why we saw 2025 be so flat.
Yeah, definitely potential market manipulation at the end of the day. But you know, I'm just gonna summarize this year with the meme, which I think is very fitting. Yeah, this is a great meme. Silver,
Dude,
97%.
Yo.
61%.
I look cute. Might delete.
Anyways, guys, if you want to support the show, guys, go check out simplybitcoin.com. We have a limited supply merch drop. Get yours while supplies last. The merch is flying off the shelves every single day. We do not drop ship. All of this we buy beforehand from a supplier here, great in the great US of A. He's a Bitcoiner, high quality merchandise. This is the type of hoodie that you don't want to wash because of how comfortable it is. Has Bitcoiner slavery and every single tag. Doesn't even have tags. It's like kind of built into the merch. It says Simply Bitcoin. It's all custom. Get yours while supplies last. Again, these are super, super comfy hoodies, super comfy merch, and stylish merch as well. So go to simplybitcoin.com today. All right, everybody, we have a hell of a show lined up for you guys. We're going to be right back in just a bit. We got Kent, the CEO of SazMining, in the house. We're going to be talking about all things mining during the culture segment. We still have a ton of news for you guys during the news segment. We're going to be talking about the New York Times. Again, not my words. This is Brian Armstrong, the CEO of Coinbase, a political propaganda machine, once again attacking the movement. Well, who are they attacking today? They're attacking the AI and crypto czar, David Sachs, who's part of the Trump administration. The New York Times, they're anti-Bitcoin. They have to be called out for it. Listen, I don't care how legitimate this institution is, how long it's been. If it's not even in the new, it's not even in the business of news reporting. It's in the business of propaganda. And I think now that the internet has created a whole new means of being able to get your news and get your information, it just highlights what type of BS is this. Like, this is crazy. So we're going to jump into all of that. It's going to be a fantastic show. We're breaking records, 650 live viewers on YouTube alone. Shout out to the Rumble audience, over 100 people watching live strong, and X always coming in strong, thousands of people watching. If you guys are enjoying the show, make sure to smash that like button. We're going to be right back in just a bit.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
All right, everybody, you want to take self-custody of your Bitcoin, I recommend the BitKey wallet. This is literally the easiest wallet that you will ever use. It has multi-sig built in. It has inheritance built in. It's built by our friends over at Square, Block, and Cash App. Again, the design is great. It's sturdy. It's easy to use. All you got to do, tap it with your cell. Bam, bing, bam, boom. Bitcoin transaction signed. Take self-custody of your Bitcoin today. Not your keys, not your cheese. Get yourself a BitKey hardware wallet today. Scan the QR code or check the link in the video/podcast description. All right, let's get to today's news. Here's Brian Armstrong. So what is the context of what we're about to talk about? The New York Times, not a really big fan of the New York Times here at Simply Bitcoin. They released that famous hit piece on Bitcoin mining where they literally doctored the sky. They made the sky look doom and gloomy over a Bitcoin mine. It's like as if like they're trying to imply that somehow Bitcoin miners release like soot and CO2 into the atmosphere. All Bitcoin miners, it's just hot air, right? So it's clearly they're not in the business of telling the truth. They're in the business of trying to sell a narrative, right? And they haven't changed. And I think the New York Times, it's safe to say at this point that they're enemies of the freedom movement. They're enemies of Bitcoin. They really are. Like, if they're so blatant in their lies and they're willing to use this giant institution to try to convince the masses of something that isn't true, what is that but not propaganda? So let's check out this first piece by Brian Armstrong, this first tweet, better said. The New York Times is a political propaganda machine, selling anger to unhealthy people. More than anything, approaching real journalism at this point, which is a shame because real journalism can actually be quite valuable. I have an opinion on that. My opinion is that I think that traditional, centralized, giant institutional journalism is going to go by the wayside. And I think you're going to see a giant rise of citizen journalism just because it's way cheaper for individuals to build giant platforms and just to report, and then the free market takes care of the rest because citizen journalists are not going to be followed if they're not telling the truth, right? Like it's amazing to see. Like, look, and this is already happening. This isn't a theory. The most popular broadcaster on the face of the planet is Joe Rogan, right? 15 million average views and listens per episode. Like, that destroys anything legacy media has, right? So this phenomenon is already happening. We're in this like slow transitionary era where like a lot of these institutions, it's like, oh my God, it's the New York Times. Like when I first saw that, like my first reaction when I was like, I was running a mission this morning and I was in an Uber. My first reaction was like who the, and then in my head, like if I was David Sachs's PR advisor, social media advisor, or whatever, and I happen to know a little bit about that, I would say like, dude, like the New York Times is irrelevant. Like who, like what does it matter what they say, right? Like if I was part of the Trump administration, I wouldn't even have legacy media in the room. Like during the press conferences, like I wouldn't even have them in the room. I would literally have Joe Rogan, Alex Jones, who else? Candace Owens, Tim Pool, the Young Turks, Valuetainment. Like that is the media now, right? Like that is who people are tuning into. It's not CBS. Like you're giving them power by like giving them this monopoly on access to you. But they're hostile institutions and they shouldn't be, right? Like what CBS does with 60 Minutes is disgusting. Like, have you ever seen a 60 Minutes episode? It's the most ridiculous thing I've ever seen. What they do is that they editorialize the interview. So what does that mean? They'll take an interview and you'll have an hour and a half interview with them. They'll edit it for like 30 to like 30, 40 minutes, and then they'll narrate over it. So they'll clip parts of the interview, they'll narrate, they'll say, so this is what he meant to say. And then they'll put another part. And then what they'll do is they'll piecemeal something together to try to convince the public on a certain narrative. The reality is, why don't you just release the entire interview and let people come up with their own minds? Let people come up to their own, that critical thinking, you know, let them decide what is the truth and what is not the truth. Let them decide on what, you know, information they want to take away from it. And this is what's happening. Like the information is being democratized and the internet is facilitating it. And these old legacy institutions that have had the power of the monopoly on information are losing it. They're not reacting well to it. And they continue to run the same playbook. And I'm calling it. It's utter bullshit. And they're enemies of freedom. They're enemies of Bitcoin. They're lying. I don't know how else to put it. Anyways, so moving on. And Brian Armstrong says, luckily, I don't know anyone who takes them seriously at this point, myself included, other than a few people over 60 on the East Coast. Dealbook seems to have a different culture somehow. Credit to Andrew Sorkin. One of the best gifts you can give your friends and family this holiday season is to unsubscribe from the New York Times. Here's David Sachs, and we're going to go through some of his personal takes on this. So why is this so important? Why are we covering David Sachs? David Sachs is the AI and crypto czar. So the Genius Act, the Clarity Act, the executive order regarding the strategic Bitcoin reserve, that was all David Sachs. That was all David Sachs. He was facilitating all of that, right? So again, do you think it's a coincidence that the anti-Bitcoin New York Times is attacking the AI and crypto czar of the White House? Do you think that's a coincidence? It's not a coincidence. This is narrative trench warfare on the battlegrounds of the internet. So let's get through some of these comments. And he retweeted some people. He commented himself. Mark Andreessen says, President Trump deserves all the credit for building an amazing team, prioritizing AI and crypto as cutting-edge technologies where America must lead the world. Nice debunk. New York Times dishonesty is so obvious that offended readers are just taking the time to do this on their own. Here is a very popular kind of influencer on X, and he says, congrats, David Sachs. The New York Times discovered that the AI and crypto czar is promoting policies that benefit AI and crypto. Groundbreaking stuff. They even uncovered the shocking revelation that all software companies use AI now. Back up the Pulitzer truck. Here's the hit piece. Silicon Valley's man in the White House is benefiting himself and his friends. Naval, there are lies, damned lies. New York Times headlines. David Friedberg says, well, he asked me and others not to post anything because the New York Times doesn't deserve the airtime, but looks like folks ignored him because they wanted to do the right thing and speak the truth, which is something I don't see a lot amongst the journals with agenda. David Sachs says, this is the new talking point that the negative reaction to the article must be coordinated. If that were true, the messages would have leaked already. I didn't ask for help, nor did I need to. Here is, it seems like they responded already. David Sachs says they're spiraling. This is the New York Times. This is a New York Times communications. They said, quote, reporting on powerful figures who influence financial and industrial policies that affect millions of Americans is core to the role of the Times and part of being a member of the free and independent press. Our reporters do not have an agenda. That is fucking bullshit, okay? I'm sorry I had to say that. I'm saying it. That is bullshit. That is bullshit. It's BS. No. Do you guys remember the article that was released on Bitcoin mining? Like,
they doctored the image in the sky. Like, what is that but not an agenda? Like, I'm sorry for cursing and getting all riled up, but like, no, this is a lie. This is an utter lie. And again, they're hiding behind the coattails of legitimacy because the paper is 100 years old. Fine, okay, but like they don't have an agenda. That's BS. That's BS. You guys want to know why this show grew in popularity? It's because somehow these two bozos who have no professional journalistic backgrounds whatsoever happen to tell the Bitcoin news more accurately and more on point than anyone else was doing. We filled a niche in the market. Like, that's literally what happened, right? Because when you would tune into legacy media about what they had to say about Bitcoin, it was just wrong. So I don't accept that message. I just don't. It's a lie. It's insulting. That's why I reacted the way I did. They examine leads, verify them in good faith with the subjects involved, publish what we confirm. That's exactly what happened here. We remain confident in our reporting on Mr. Sachs, an important and influential member of the administration. The Times article documents the ethical complexities and intertwined interests of his dual roles as a government advisor and a major investor. So anyways, like, I don't really have anything else to say on this. Like, it makes me very upset that, like, you know, they hide behind this branding to just, like, you know, like they hide behind the branding and I don't even know who the editors are or like what they see of themselves or like whatever, but it's like you guys don't get to tell people what to think, right? Like, you guys aren't the arbiters of the truth. You guys don't get to determine what the truth is, right? I know that you really want that, but that's not how reality works. There's the truth and then there's a lie, right? There is no in between. There's no, this is what I perceive to be true. No. There's the truth and then there isn't the truth. It's literally black and white, right? So anyways, I'm going to pass it on to Opti. Opti,
let's go to Kent.
We've been combating this, you know, like narrative trench warfare on the internet for like the last 5 years of Simply Bitcoin's existence. Kent, you're a CEO in the mining industry, bro. So I know you know what I'm talking about. What article I'm referencing when I'm talking about the New York Times article referencing Bitcoin mining. Like, they're not in the biz. They're not interested in telling the truth. They're interested in telling the public narrative.
Well, you're 100% correct, right? And, you know, one of my favorite quotes that I choose to live by is, you don't fight the existing system. You just focus on building a better system and people migrate. And congratulations, Nico and Opti, you've done that, right? Like, you guys are building that better system and people are migrating. And yeah, it's damn frustrating. Apologies for my cursing, to have such ridiculous FUD thrown at your industry. 18 plus months of dealing with energy FUD is ridiculous, but that's basically courtesy of the New York Times throwing shade at our industry in a completely ridiculous way. And as you were talking, I kept seeing in my head like the Hunger Games, right? And the New York Times to me seems very similar to, like, what they call it, like the Citadel. It wasn't Citadel. It was like the inner sanctum or the city folk, you know, that just live this opulent, ridiculous life that is totally disconnected from the reality of the people that are feeding it. And I just think that we're hearing the dying screams of that right now as they sort of rage and gnash their teeth. I think, you know, there's this thesis, I think it's Balaji Srivastava, I always pronounce his last name wrong, that has this idea that basically as Silicon Valley rose during the 90s and 2000s, like the power began to shift from the journalism in the Northeast to the Silicon Valley tech bros. And that shift left the New York Times and other media outlets incredibly envious, because they're not builders. They're reporters on the news, and they're incredibly biased. I think they've always been incredibly biased. And I think, if anything, what I hope as we move forward in time here is that folks like yourself and other independent media. And Nico, I do hope you end up in the White House someday, reporting and talking to all of us about what happens there at that level. Because I think you're right. I think you're going to get more honest journalism if folks like yourself and the independent media are there. But I think as we go forward in time here, what I'd love to see from my vantage point with journalism is for people to just disclose their biases. And I think that's what we're seeing with like this focus on authenticity that people seem to be coming to. I think that's why Joe Rogan is so doggone popular, right? He's in there because people are like, you're authentic, man. You're just telling us your views. Because here's the fundamental thing that I think we tried to do with journalism over the last 100 years is we tried to divorce bias from the reporting. And I don't think it's possible. I think it'd be way better if we just hung our hat and said, hey, man, this is a Bitcoin bias show. Like, we're going to look through the lens of being pro Bitcoin on this show. And as long as everybody knows that when they show up here, which they do, everybody sits down at the table and says, cool, we know what your bias is. I think the problem has been like the journalists, like the New York Times, they clearly have a bias. The thing is, it's sneaky and snaky. It's under the table dealings that nobody really knows and understands. And as a result, it leads to this inauthentic journalism out the front gate. So the funny part is, back before like William Randolph Hearst came along, that is how media was. There was just bias. There wasn't this effort that we now have for independent journalism to be, and not independent journalism, but journalism to be separated and like on high and objective and all this stuff. It's like, I would rather have the non-objective, bias on the table approach to journalism than dealing with the BS that we've been dealing with.
Yeah, 100%. I mean, I think that's like the I don't know how to describe it. Like that's the disconnect. That's how I would describe it. Like the disconnect is that like, it's like, yes, you tune into Joe Rogan. He's going to tell you, dude, I like elk. I like the things that he likes. And you tune into Joe Rogan, you know what you're going to get. Right. You tune into, the any of these podcasts, they're wearing it on their chest, exactly who they are, right? You tune into Simply Bitcoin, you guys know that you're going to get news from a Bitcoiner's perspective. We're not hiding that from you. We're not telling you, oh, we're neutral here. We're going to try to report everything neutrally. We're giving it to you from our perspective, right? From the Bitcoiner's perspective. Like, we don't hide that. Like, and I think, Kent, your observation was spot on. The issue is like the how they claim to be neutral when in reality they're not. And I think that if they claimed that they were just honest and they said, listen, guys, we're not neutral. We're going to give it to you from a certain perspective. I think that's when the game is up, right? Because I think that they really benefit from that perception of neutrality, right? Like that, oh, it's the New York Times, of course. Like, I have to take this as a matter of fact. This is the paper of record. Like, how could they lie to me, right? This is the same New York Times that convinced you that Iraq had weapons of mass destruction that led to one of the deadliest wars in American history, right? But again, and I can go on, by the way, there's like a history of the New York Times, releasing these insanely consequential stories in American history that turned out to be blatantly false, right? There's so many examples. The Walter Duranty one, right, where like literally you had a New York Times reporter that was posted up in Soviet Russia, and he was reporting on, the wonders of what the Soviet Union was doing under Stalin's rule. And it was discovered through the book, The Gulag Archipelago, and Alexander Solzhenitsyn's work, that a lot of the stuff that he was doing was just utter BS. Right? That guy got awarded, that New York Times reporter got awarded a Pulitzer Prize. It was never taken away from him. It was never taken away from him. And it was only until the 1990s, so like 80 years later, that they even issued an apology, right? Like, this is the New York Times. Like, this is the paper of record. They've been doing this for a long time. The only difference now is that there's the internet. So when they drop an article like that, you just see an attack. X goes crazy. People are posting their thought. The people have a voice, right? Before, there was none. They posted an article. There was no mechanism
where people could make their voices heard and make their thoughts known, right? And this is the digital era. This is what the book The Sovereign Individual was talking about. Like, this is what the internet has enabled. It's given people a voice to speak up and call the BS. If you were to summarize all of this into just a perfect example of what it is I'm talking about, if you go to Fandango, there's two reviews. There's the audience score and there's the review score. I always look at the audience score. The review score is like, they leave it there because back in that era, there was no other way, right? You needed an official reviewer, but a lot of these reviewers are they're ideologues, right? So you see a movie, for example, that you happen to like, and you're like, yo, that was a dank movie. You look at the audience score, it's like 95. You look at the review score, it's like 50, right? So it's like, it's the same thing, man. It's the same thing. The internet has changed everything. Take advantage of it. This is what Bitcoin's all about. Anyways, guys, we're going to hit the culture. When it comes to media stuff, it always gets me riled up for some reason. We're going to get to the culture. We're going to talk to Kent from SazMining. I see someone already in the chat saying they found SazMining through Simply and they have 10 miners through Saz. That's fantastic. So if you guys haven't heard about Saz, you guys are going to want to stick around for the culture because we have the CEO and co-founder joining us on the show today. And we're going to be talking about all things mining as a service. We're going to be right back in just a bit.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at HIVEDigitalTech.com. I want to give a shout out to our partner, BitcoinBend.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Bend's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to BitcoinBend.io, join today, where Bitcoin meets freedom.
All right, everybody, we are back in the house. We got Kent joining us on the show today. Opti, it's time,
Let me
it's
take
time
it
to talk
from
about
here.
mining, bro.
Let me take it from here. So, obvious. Sorry. He's abusing the soundboard. This guy's a child.
Stop. As you guys know, if you've been watching the show for a while, Kent is not just the CEO and co-founder of SazMining. He's also basically like our in-house kind of, on the ground mining expert. And so I really want to cover this before we start talking about SazMining, because we are seeing some very interesting stuff happening right now in the mining space, considering that the Bitcoin price has gone basically sideways all year long. And so I want to kind of just get your overall view of the mining space. And shouts out to BitcoinNews.com. They did Bitcoin miners are facing the toughest margins in history. And you can see it's just kind of, Q3 2025.
it's been rough out there for the Bitcoin miners. You know, Bitcoin's drop has pushed hash price to a structural low of $35 per petahash, well below the roughly $44 median cost of production. Even efficient low-cost miners are near break even. Payback periods are getting harder. This is like the hardest time, I think, to be a Bitcoin miner. Obviously, because the Bitcoin price hasn't really done anything. The more hash power going up on the network, the more the price goes sideways. This is like where the true miners are being tested right now. So what's your overall view of what the market is seeing from the mining side, Kent?
Well, it's hard, right? Bitcoin mining is a 24/7 liquid market. Everybody that has a mining rig and electricity can plug in. The more people that plug in, the more competition there is to get that scarce block reward, and that scarcity helps to drive the price up, right? So we have this constant increase in hash rate. And you know, I was in an offsite last month and we were really digging into the numbers here, and best data that we could get was, you know, hash rate has been screaming since like 2020, like 3.5% a month. And the reason that mining has continued to work is because the price has gone up faster than the hash rate going up, right? To me, these two variables are like strands of Bitcoin's DNA, right? They're the twisted helix by which like one moves and then the other moves, and it's weird, like the exact relationship. Nobody really knows the exact relationship. We probably won't know for another 20 years or so, but it's a fantastic dance. And what we're seeing right now is price and hash rate are like your profit margin as a Bitcoin miner is the difference between the price and the hash rate. And the more that those separate over time, price going up faster than hash rate or just hash rate going down, the more profit there is in mining. And then vice versa, as they get squeezed together, the less profit there is. And we're at one of those moments right now. Now, it sucks because it's a particular moment where a lot of folks are saying, oh no, just like Bitcoin's price is falling back, like we're scared of the market. We don't want to buy mining rigs right now. And, you know, you can do your best to tell people like, look, you're actually really smart because the value proposition for mining actually didn't change from 125,000 down to the current price of, you know, 88K, 90K where we are right now. So, you know, there's no difference. Like your hardware costs the same. Your electricity costs the same, and the amount of sats that you get out of that hardware is the same. So really no change, right? But that's a hard message to hear because people just get into fear-based mode and like kind of groupthink sets in. But I think what's really great about this time is to see the pubcos really being squeezed. You know, there's most of the pubcos, because their fiduciary responsibility, their financial responsibility is to get their investors' returns denominated in dollars. Because they have that fiduciary responsibility, most of them have already made announcements that they're pivoting to AI. That means hash rate coming offline in a pretty substantial way. I don't know if it truly comes to pass. You know, we don't know until it actually happens, but I am expecting the first half of next year that there's going to be some hash rate coming offline, and that will be faster than the new stuff coming online. So all of that to say is we're seeing some of our enterprise customers starting to show up and talk with us and say, hey, I think it's the right time to deploy capital, because the smartest people in mining are the ones that go and buy when everybody's fearful, right? This is where the Warren Buffetts of the world make their money, and some of our bigger clients are doing that. So that's been an incredibly positive thing to see. But most positive to me is just knowing that the pubcos that I don't think have been particularly healthy for the network are starting to pivot. And that pivot is going to make it more profitable for the clients that are signing up now or have been mining with us. And it also helps the Bitcoin driven acquisition model, which is how Satoshi designed the network, is to distribute Bitcoin through mining it. It gives us a shot, the Bitcoin community, to acquire our Bitcoin and actually take the network back. Because if you come to mining with the idea of, look, I want to come to mining and I want ultimately to get more fiat out of this, that's a different outcome than if you come to mining and say, look, Bitcoin is my money. I want to save Bitcoin and I want to acquire as much Bitcoin as I can. That actually means that you're aligned with the network, with your intention, and the net outcome leads to a more protected network. Because the centralization of mining has been a serious problem. And I'm glad that there's light on the horizon right now that suggests that we're going to be moving away from that. But just a couple of data points from like a moral standpoint, right? The Bitcoin network right now has 2 mining pools that have 48% of the hash rate. So that's Foundry and Ant Pool, right? And there's a bunch of proxy pools that have been discovered that are Ant Pool as well. So it's over 50%. And what that means is that there's only two throats that need to be choked to pressure somebody into censoring transactions on the network, which would undermine some of the faith and confidence in the network. So we need to diversify the mining pools. Thankfully, we offer Ocean as one of the options for our customers, and we're seeing a lot of adoption of Ocean out there in the mining industry, which suggests that we're going to see better diversification. But Ampool is a subsidiary of Bitmain, and Bitmain is the biggest manufacturer of mining rigs out there. They produce about 75% of the hardware. So not only do they produce 75% of the hardware, but they conceivably are one of the 2 actors that have the potential for this censorship on the network that could be exploited by a state actor. So it's morally important that we get involved with mining as a Bitcoin community, and economically it's the right time to do so. So I'm stoked to see the pubco sort of shifting. And then the last data point that I'll give is something really phenomenal. The business model of a lot of the pubcos, it just hasn't been all that successful for a variety of reasons. But we took the publicly traded quarterly results. We went over the last 3 years, which is the expected useful life that is used by the public. It's kind of the standard in the industry, right? It's how all the accountants decide, hey, how are we going to write off the value of the mining hardware over time? We took that 3-year perspective and said, look, how much did you guys spend an entire community? So I'm not picking on any one pubco here. And how much Bitcoin did you receive? And guess what? You do that analysis, go plug it into an LLM, and you'll see that's about $167,000. We did that exact same analysis on SazMining because we're completing our 3rd year in the field right now. And guess what? We're at about 70K, which is Bitcoin's production price. So when you put it all together, now that's historical, right? That's not forward looking. I can't make any promises going forward because we are subject to the price and the hash rate on the network. But if you just look at it, there's a reason why our business model is starting to prove successful, where we're aligned with our customers. We don't make money selling hardware. We don't make money selling you electricity. Instead, we only make money if we can help you generate Bitcoin. But there's a reason why this model is starting to prove disruptive out there. Aligning interests is really the best way to go, as we know, as Bitcoiners, and it's the reason why the network itself is thriving. So glad to be a part of this shift of decentralizing the network. And yeah, it's brutal out there, but it's sort of the necessary pain of the network healing and getting more healthy on the other side.
Oh yeah, I mean, dude, a great analysis. We have our mining expert coming in, chiming in, dropping his thoughts. I do want to pivot the conversation, talk about SazMining. Kent, what is SazMining, my friend?
Oh, SazMining is special. Not as special as Simply Bitcoin. I won't go that far, but we're pretty special. No, we came to the market with just a different thesis is what we did. We said, look, Netflix, Shopify, Uber, all these companies, they applied a software as a service.
He's back. He's back.
We got
Jeez.
Kent back.
Sometimes you just don't have any control over your mental's network connection. So what I was saying was that we came to market. We spent a year building software because we knew that if we took a software as a service approach and then applied Bitcoin mining and data centers to it, that it was the approach the market wants from a web native adoption, right? So we're just taking a proven playbook and applying it. So what that means for us is you come onto our website, you see that there's a variety of rigs that you can choose. You have got a variety of value propositions there, how many sats each one produces. We have your daily cost to mine a Bitcoin there. That's the energy cost So that's just simply taking how many sats do you get for how much electricity do you spend each month to get you your daily cost to mine a Bitcoin or energy cost to mine a Bitcoin. Right now we have rigs in Paraguay and Ethiopia on offer right now, and that's our cost. And you pay that, we get you live in Ethiopia. It's about 4 to 5 days that you start hashing. You tell us how you want to pay for your electricity bill, and you've got a dashboard to see all your payouts. Bitcoin goes straight to your wallet when it's paid out from the mining pool. 15% goes to our wallet, and that's how we actually make money as a business and grow our offering and can offer a better product and service to you.
That's awesome, man. Again, you guys are like the Uber of Bitcoin mining, right? Which I love, dude. So again, and the alignment of incentives I think is super important, right? You guys don't make money unless those machines are up and running, right? So you guys are incentivized to have them on all the time. I think that's unique in the hosting business sector side of things of our industry. The alignment of incentives, I think, is so important. As Bitcoiners, I think you guys have to have a deep appreciation of the power of incentives. So there's a promo code that's live right now. Shout out the SazMining crew in the back. I don't know who it is.
I don't know who it is either.
I don't know who it is in the chat. So, but shout out to the SazMining, group in the chat. But
yeah,
yes,
shouts out to whoever's doing the YouTube. That guy's the GOAT. He likes me, so he's cool.
If you guys use promo code Simply Bitcoin or promo code OPTI, if you use promo code OPTI for a limited time, you get $125 off of each rig. That's right, promo code OPTI. I do want to thank Kent for coming on today's show. Kent, thank you so much for joining us on Simply Bitcoin Live. If you guys enjoyed the show, you know what to do. Smash that like button. Consider subscribing. Head over to SazMining.com/simplybitcoin today and start mining. Bitcoin mining as a service. SazMining. I promised you guys I would give you guys some free sats before we logged off. So we're going to do just that. We're going to head over to bitcoinwell.com. Again, best place to build your automatic self-custody Bitcoin stack. When you head over to Bitcoin Well, you earn something called Bitcoin Well points. You could use those points towards redeeming some prizes or playing the Bitcoin Wishing Well, which we're going to be doing live for you guys right now. Get your Lightning wallets ready. First person to scan the QR code has won 598 sats today. If you go to bitcoinwell.com/simply Bitcoin, whatever you prefer, you get 3 tosses into the Wishing Well, and you have an opportunity to win up to 1 million sats every single time you guys play. All right, everybody. Love you all. We'll see you guys tomorrow for a brand new episode of Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.